But we begin right now with some breaking news. Trade talks with China wrapping up just moments ago. And we just heard from President Trump. Let's get to Kayla Tausche in D.C. with the very latest. Hey, Kayla.
Hey, Melissa, we just saw the Chinese delegation depart the office of the U.S. Trade Representative en masse after nearly 7 hours of negotiations that President Trump just moments ago said went very well. He confirmed again that he will be meeting with China's top negotiator, the Vice Premier Liu He, at the White House tomorrow. He also answered a question about a possible investigation that he requested China do last week to look into the family of Joe Biden and possible corruption, according to the president, that he believes went on there. He said it's up to China to look into whatever it wants to. But that is an interesting comment given a wrinkle today where an outside advisor to the president, Michael Pillsbury, at the Hudson Institute, made some comments to the Financial Times saying that he raised the issue of the Bidens with China. Later in comments to the Washington Post, he acknowledged that he discussed the Bidens with China, but said it was China that brought it up and it was not a discussion that happened at the behest of the president. That's certainly going to be a cloud that hangs over any progress in these talks and whether there's any relation between these two issues. Here's what the Chamber of Commerce expects to happen tomorrow. To give you a little detail about the contours of any deal that we could see, Myron Brilliant is the executive vice president at the Chamber. He met with Liu He yesterday. He says to expect progress and de-escalation, but not a grand slam, that there's still going to be a lot of work to do. He expects the October 15th tariffs to be paused or to not escalate on that date. He says that you will see a possible currency deal this week that's been underway for months, and that Huawei licenses, for better or worse, have been a centerpiece of discussions around trade. So that's straight from someone who has met with China's top negotiator in just the last 24 hours. And as the president says, things have gone very well. Of course, Melissa, we're all trying to prognosticate exactly what we could see tomorrow, and that's a little bit of detail that may help get us there.
You mentioned the tariff escalation on the 15th, Kayla. How about the December 15th tranche?
Well, of course, that is sort of the holy grail for all of these technology and consumer companies that would be swept up in that right before the holiday. Unclear exactly how the president feels about that. That is seen as, one of the biggest pieces of leverage that the White House has in this situation, but it also could be the biggest self-inflicted wound. That's the worry of the principals here. We don't yet know whether that is on the table.
All right, Kayla, thank you. Kayla Tausche in Washington for us with the very latest on the trade negotiations. Again, Trump saying we had a very, very good negotiation. Guy Adami, how do you think we enter tomorrow's session?
Well, I mean, positive, clearly. Apple tells you that there's probably going to get a deal done. And even Caterpillar, which has been a miserable stock, that was actually up today as well. So both those stocks indicate something gets done. But it's funny, people on Twitter say to me, you've been saying for the last 16 months that the Chinese can sort of have the resolve.
Yep.
That's exactly the point. It's been 16 months, and there's still no trade deal. So, President Trump can speak about, we had a great conversation. A lot can still happen. I mean, they could absolutely walk away. They don't get the deal they want. IP is still a huge thing here. I have no idea. The market is saying that all systems are go for a trade deal, but then you're into earnings next week, and you wonder, and the point I tried to make last night is, you wonder if we're not really focused on the right things. Maybe things are slowing down. Maybe the euphoria around the deal has gotten us to basically all-time highs. You get a deal, then what? Then you have to rely on earnings. And quite frankly, I don't think they're going to be there.
I guess the question, in terms of the outline of a skinny deal that Kayla had outlined with Myron Brilliant from the U.S. Chamber of Commerce, if those things are accomplished, would that trade deal trump the negative commentary we could get out of third quarter earnings season because of the uncertainty of trade? Does that uncertainty go away?
I think no, because I don't know if the kind of skinny deal or any type of de-escalation is going to be a short-term positive for the market. We saw it over the last 24 hours, how the market traded. It was down big in the middle of the night, rallied back when things were going better. So you have to think that any type of de-escalation is good. But then it comes to, does it give CEOs confidence to go out and spend money? Do they need to spend money? Does it lift their uncertainty about what the world looks like? What does Europe look like? What's going on with Brexit? I don't think it does that. So to me, any rally is simply a sugar high relief rally, and then it's a prove it to me type of market.
Yeah, I totally agree. I don't know how you can feel really good about earnings. I think that the earnings that companies will report will probably be okay, right? People are employed, right? Interest rates are low, good for a lot of industries. But we saw it, we'll get to it a little more later, but Delta, for example, great quarter, guidance not as good, and that ended up being this story. And I think we could end up seeing that over and over. We'll start to see it next week with the banks. But Guy has been right all along. He's been skeptical of a deal, and I feel like this rally is one to be faded because so many times
this rally, the one that we have now,
right now,
3% off of record highs.
Could it be a little bit more going if they announce something good? Yeah, I guess it probably could, but also it could end up then quickly falling apart. I feel like every time we do something that seems rash, raise tariffs, then they retaliate, and it seems to me like the administration is like, wow, it's like Mike Tyson said, everybody has a plan until they get punched in the face. Every retaliation is like, oh, a punch in the face. We didn't know that was coming. So I don't love how we're positioned going in, the market being this high, and the chances of something comprehensive, very low, and maybe a small deal.
Yeah, I'm not sure that looking at the S&P 2.5% from its all-time highs is the best lens to kind of evaluate how these trade discussions are going. We know that the S&P has outperformed almost every major, market index, equity index for the last couple of years. It's just a source of funds. It's the same reason why the dollar might be up. It's the same reason why treasuries have acted really well here in the U.S. It seems to be a safety trade, and we also see obviously these sectors in the S&P that are driving this last leg here. It's staples, it's utilities. I know we sound like a broken record here. It's not giving me a whole heck of a lot of confidence saying that's the thing that's going to break this market out of this almost 2-year range right here. And I think you got to go back and you got to look at the underperformance today of small caps. The IWM that tracks the Russell 2000 did not act particularly well. I think that the transports still act particularly poorly. So there's a lot of stuff under the surface. The stalling out in mega tech, which is growth. To me, Amazon, I know Guy mentioned it earlier in the day when we were chatting, went red on the day. That stock is, 15% from its all-time highs, has not confirmed a new high in the S&P all year long. So to me, I just think there's a lot of things under the hood that don't act particularly well. And I'll just make the point I think I make every single night that if you've bought every new high in the S&P since January 2018, you just didn't get a whole heck of a lot for it. You actually got a big drawdown over the next 2 months. And I don't like the fact in April we had a sell-off after a new high in earnings season. Same thing in July. What are we doing right now? We're heading to a new high as we go into Q3 earnings season. So to me, I just don't think this is what you want to buy to get a lot of torque to the upside.
Yeah, I'm glad Dan mentioned the IWM because I think it's important. And if you go back, I think it was May of this year, 145 was where it bottomed out. If you go even further back from there, 145 has been a pretty critical level. We tested it last couple days, closed up, I think, 0.4% right today. It's probably higher in the after hours based on what we just heard from President Trump. But if you want to trade the broader market against something, in my opinion, and I've said this for a while, I think 145 in the Russell, the IWM, is sort of your line in the sand.
I think everybody here sounds pretty cautious about any sort of deal that could be reached. But what I thought was interesting in today's market was this move in treasuries. I mean, we saw a 1.5% decline in TLT. We had a big rise in the 10-year yield. It didn't seem commensurate with what was going on in the markets in terms of a 0.5% rise pretty much across the board.
Yeah, and bonds haven't been trading in lockstep necessarily, or at least percentage-wise, with the markets for a while, which actually concerns me a bit because we need an awful lot of demand for these bonds. So if you're starting to see kind of a sell-off in there, you don't want bond yields to rise for the wrong reason. If we have strong growth and the 10-year yield is supposed to reflect GDP growth over the next couple of years, if we have strong growth, then great, have rising yields. But if we have rising yields because there's not a lot of demand, and this might be counterintuitive, but if you have a deal, a lot of money has flown into the U.S., as Dan said, because of a safe haven, right? You could have money start to flow over to Europe if we get a deal. Europe might be a better beneficiary. So you might see money pull out of the bond market. You might see money pull out of the U.S. equity market and flow over to Europe, even if we got a deal that most of us expected.
Can we walk through that a little bit? I mean, because a deal with China would mean greater economic growth for Europe. I mean, the upside for Europe is much greater
because China's their biggest export market, right? So China's economy is doing better. Europe economy is doing better. Europe has gotten decimated in this, so you might see that flow back into there.
I mean, would you buy Europe if there is a China deal?
I'm always long, around the world, but and so far, I mean, some of Europe's been okay, but other parts not as well. Germany actually, the index, the DAX, has had a decent year.
Yeah.
It reflects, I think, some optimism that things have bottomed.